Hey everyone, and welcome back to Your Money Your Life podcast, episode 195 of the podcast. Make sure before we get into it, wherever you're listening, like, subscribe, 5-star rate, and review the pod. Also share it with your family and friends. You can also watch the podcast on YouTube if you so please. Hit the notification bell so you know every time we go live. We'll first start with our market update of the week. It's been slightly in correction territory for the market. Correction territory, meaning the market is taking a little bit of a step back. Let's look at the year-to-date chart. Again, we've talked a little bit about the high being July 30th for the near term, and we've seen that downward trend ever since. And again, a lot of it's driven by inflation, what the economy is doing, what the Fed's policy will remain to be, and earnings. We're seeing companies have their earnings for Q3 coming out right now. So we'll talk a little bit about some of those earnings and what's going on, especially on the tech front, which a lot of tech companies reported recently. I'm a little bit under the weather, so if I pause to cough, it's because I got slightly sick last Friday. Feeling a little bit better, and we keep on rolling. So that's the big thing in the market. Let's jump in, dive deeper into what's going on in the market. So yesterday was a big correction on the NASDAQ. Again, Facebook reported advertising was seeing a little bit of softness in their advertising. That's not good as far as overall. Facebook is a good barometer for what's going on in, just general B2B or even a little bit into consumer, but a lot of B2B. So, and they also lost 3.7 billion on the Reality Labs division. So they slid 3% on the news. We also saw Alphabet report, and cloud growth was a little bit slower. In their cloud unit, the analyst estimates, their growth for the cloud actually came in a little bit. Their print actually came in a little bit lower. So again, we saw a little bit of tech companies report some softness in the data. Some softness. Microsoft had a decent quarter, and they were actually up yesterday, despite the rest of the tech area just having a little bit of a correction again, and we mentioned. So, year to date, a little bit of that pullback. The Nasdaq still is the leading index on the year, with the Dow being flat or down, S&P up 8 or 9% so far this year, and the Nasdaq being in the teens, if I'm not mistaken. So leading up this year, and again, I think we'll have more softness for the next month or two, but at the end of the year, we may see a little bit of a bounce back towards the end of the year, early next. Let's dive into our actual current events of the week. So Morgan Stanley's naming a new CEO. They announced that Ted Pick will succeed James Gorman as CEO. So Ted's competitors for the role were Andy, Dan, and it was actually a battle that it seemed like it was a big battle for this new job to head up one of the biggest banks in the world. They said they're going to keep the same strategy, but it's going to be a new person leading the strategy. The Morgan Stanley played a key role in Elon Musk's purchases of Twitter, and a lot of people are saying that the banks that played a part in lending into that deal are going to realize heavy losses on that deal, seeing as how Twitter is still struggling to kind of find its footing and find revenue and find their advertisers again. So that's a big thing to note. We'll see. I mean, it's always interesting when a big bank makes a change at CEO. Goldman Sachs is rumored. I mean, I don't think the Goldman Sachs guy has much time left. They said he has to stop DJing. The bank hasn't done incredibly well. The consumer division not doing that great. So they may be looking at a change themselves. So you're going to see a lot of management changes in the next, several months, because it's tougher times and people have to really evaluate what's going on. Speaking of evaluating, Sam Bankman-Fried is deciding, and again, he's the founder of the failed crypto exchange FTX, the one that is being indicted and legal action against him for potential fraud, commingling of funds, wire fraud, all these different things. He's going to testify. He's going to testify as early as Thursday in his criminal fraud trial. Thursday could potentially be today for those that are listening. And I don't know. I think he still believes that people believe that he's this innocent, frizzy-haired kid that's just trying to save the world. But we know the truth. A lot has come out since we found out about the scandal. And I don't know. I don't know if this is a big good move on his part, but he's gonna attempt to speak because he still believes that people will look at him as just like some innocent character. And so I think that's why he's taking the stand. He's gonna the cross examination, better be on point because they have ways to get him. He's a smart guy. I'll give him that. But where the facade is over. The facade is incredibly over. Speaking of frauds, there was another fraud that gained steam. Real estate RICO, they're calling it. It was actually in New Jersey. Popular DJ and another guy that's a social media influencer, in quotes, running a Ponzi scheme as it relates to real estate in the New Jersey area. Look that up if you haven't seen it. It's got a lot of news in the last week or two, but something to look out for. So, private equity firm KKR seeking to tap into retirement savings of baby boomers. Um, so, it looks like these private equity firms are looking to invest in or looking to raise money from retirees for infrastructure investments. So it's really looking like these. So a lot of these big private equity firms have a lot of capital, a lot of liquidity, and they're looking for ways for one to deploy this capital. A lot of them are buying up smaller dentistry firms. They're buying up different things. And now it looks like they're trying to fund and find people with a decent amount of funds to be able to dive into a different asset class, which is infrastructure investments. Again, it's just to know what's going on. I think it's interesting that people are always trying to tap capital. People are always looking for ways to tap into capital and deploy capital in different things that they think are investments. So always good to know what these big private equity firms are doing, how they're moving. We've already talked about how they're buying up a lot of single family home, multifamily homes. They have so much dry powder, meaning so much capital that they're trying to deploy it in so many different areas and just have reoccurring revenue for all of time, reoccurring cash flow for all of time. So many people think it's wrong. I think I think a lot of retirees should just really just relax on their retirement and just chill. Probably unless they have ample a lot of money, shouldn't be doing some alternative investment with your retirement funds. That's probably not. You want to do alternative investments with smaller amounts of capital, not with larger amounts of capital. That's just something that you probably anyone smart would advise, unless again someone has lots and lots of liquidity. And we talked about it already, the tech giants and how they're doing. A lot of them are reporting, and it's going to move the market. Amazon is set to report today. Apple and the video released their earnings next month, but it's going to be a good tell on what's going on as far as the tech market, what's going on with all these big tech companies, and how the equity market will move going forward, just based on the fact that they're the bellwethers of what's going on in the economy. So all these big companies and their reports will be the bellwethers of this earnings realm. Meta did report, we talked about a little bit. They had profits soar and ad was stronger, but they did say that there could be weakness in the advertising revenue and advertising market going forward. So they saw increase of their revenue and profits, but the Reality Labs metaverse unit, they might have to shut that down. I don't know. $3.7 billion loss, 3.7 billion loss, operating loss is a steep price to pay for something that we don't know. They don't know if it's gonna ever be something. Another tech company they reported was Snap. They returned to revenue growth, which is something that they struggled with. Reels, they're reeling in more money, more ad money with new features. So Snapchat gained 9 million daily users for a total of 406 million snappers. Again, they skew younger with between 13 to 34-year-olds. Meta has, of course, in comparison, 2 billion users. But Snap's revenue grew 5% in Q3, which isn't great for a growth company. But they've gone through some struggles where they had loss of, they had revenue decline and not growth. And now they're showing a little bit of growth. So the market like that. But again, for a growth company, it should be a little bit higher, I would presume, if you're talking about Snap. So that's something we should look out for. Rent affordability at its lowest level in decades. Rent pricing algos are on trial. High rents aren't just caused by property owners. They're seeing that rent algorithms, prices are set by algorithms that suggest rates for renewals and vacancies. Two companies are behind these pricing systems. So a lot of times, like the rent, when you're up to renew or when you have changes in your rent, they're being done by algorithms. And a couple of these companies, RealPage and Yardi, are facing lawsuits alleging their algos reduce competition and enable collusion, driving rents higher for millions of Americans. Um, Property owners, of course, are trying to keep vacancy rates low, maximize profit. They slash rents when demand drops, but rental algorithms often determine that raising rents will drive profits even if vacancies increase. So they're looking at it from a standpoint of like, okay, even if we lose vacancies, if we drive the rents up for everybody else this much, we'll still be profitable. And so people are suing because it's making rents in a lot of places much, much higher. But rents, so mortgaging a house in America is not pricier than renting, but rents ain't cheap either. They're up 7% from a year ago. National rent affordability, it's at its lowest level in decades. Medium one bedroom in NYC rent hits 4.3 for 4,300 in NYC, 2,400 in LA, and 2,600 in Miami. 70% of renters have household income below the medium level. So they're just taking aim at these algos that are still pushing, using mathematics to push rents higher for the people that are there, even if vacancies are lower. And so that's an issue that they're raising, and they're suing these algorithm companies that are doing these property renters, our property managers are using. So understandable. Again, it's a big thing that people are explaining about is the prices and inflation of things, which isn't going to go away. It's not going to go away anytime soon. Everyone's going to have to adjust to that. Um, Goop, isn't that the Gwyneth Paltrow? Yeah, Goop is Gwyneth Paltrow's brand, and it just hit Target and Amazon. If people are looking for an affordable luxury, I think it's a beauty skincare brand. So a lot of these beauty skincare brands are doing well. Look at all the influencers that have them; they're doing incredibly well. Skims, Kims, or whatever they're called. They're coming out with a men's line for Skims. Are we to get that, men? I mean, I'm not mad at it. I can get some Skims for men. That's not a bad thing. Um, so with mortgages increasing, there's a fact that says buying a house in the US is now 52% pricier than renting. We've talked about this many, many times before. Um, Interesting. Lawsuit could disrupt laws around US broker fees, revamping how Americans buy houses. So there's two class action lawsuits targeting US realtors, dominance over broker fees, and this got underway in Missouri yesterday. Um, they're representing 260K Missouri, Illinois, and Kansas home sellers versus the National Association of Realtors, which backs the U.S. housing market system for brokers sharing commissions. Typically, sellers must pay between 5 to 6% of their home sale fees. Sales, so sellers must pay 5 to 6% of their home sales to fees to split between buying and selling agents. Critics say it's a conflict of interest because it's giving buying agents little reason to negotiate lower prices. So they're pretty much saying, which makes sense, that the brokers don't really give a crap if the price is higher, though they want it to be higher, because if both sides are being paid by the seller to split the 5 to 6% commission fee, they want the price to be higher. But if you're a buyer and your salesperson is saying, oh, they're not going to really fight to negotiate a lower price because they're going to get it based on the price of the home. They're going to get the commission split. It's collusion. They're pretty much saying it's a system of collusion, and people want to bypass these fees. I think the rich. I think they said Michael Rubin didn't even go use a broker. He bought like $200 million home. Didn't use a broker. Just negotiated with another billionaire, and they just did it on their own, saved themselves the 2%, 6% fee. So people are doing this. People are getting sick of this. People are finding ways around it. It makes sense in a lot of cases. And so, we'll have to watch out for this. Again, as people think more about it, if this goes anywhere, this is going to be something to really, really watch down the line. Excuse my sick voice, but we're going to get even more into our question of the week. We don't stop. Every week, we keep going. We give people what they need to know. This is going to be focusing on student loans, college. That's the theme. But what percent of students receive scholarships or grants for college? What percent of students receive scholarship or grants for college? I think it's a decent percentage. I'm going to go 40, anywhere 40 and up. 63% of all undergraduate students receive at least one grant or scholarship. So that's a decent number. That's what I expected. What's the average time to complete the free application for federal student aid, FAFSA? Free application for federal student aid. What's the average time to complete it? I'd say 30 minutes. It's a pretty long thing. If you're new, dependent students, 51 minutes. Independent students, 27 minutes. So I was close. If you're renewing, dependent students, 35, independent, 17. So very, very close on my guesses. Folks, as you can tell, under the weather, but I wanted to make sure we tapped in and gave you the episode this week. Exciting things coming with New Street, myself. Keep sharing, keep liking, keep sharing people that need to hear this. We're going to be doing a free personal finance basic intro course on a recurring basis for non-clients that need it, so people can share this with their family and friends that need this stuff. Make sure you tap in. We'll talk next week.